My name is Nenad, and today we will see price action training school, MACD and stochastic in depth. So this is our next class towards a price action training school, and today we will cover in-depth use of MACD and stochastic. So we will see how we can use MACD on a multiple time frame and also how to use stochastic with different settings. Before I begin, as always, our standard is disclaimer. Online education materials are available by Admiral Markets Estonia for a global audience. So take into consideration the information in this session is not suitable for everyone. If you want to get the corresponding information on charting conditions and any other detail, you should visit admiralmarketsglobal.com, select your country of residence, and contact an appropriate entity. Risk disclosure statement stating all possible risks associated with Forex market. By accepting the risk, you're also proceeding further with me. And final part explaining that Admiral Markets will take no responsibility for information accuracy. The analysis is my opinion and in no way it's connected to AMUK's opinion. Webinar is for information and educational purposes only. And of course, by logging into your trader's room, you can download Admiral Markets Supreme Edition. Don't forget that you're officially trading with the best MT4 broker. So what is MACD? MACD explains practical usage of multiple time frame MACD for trend and momentum, stochastic and stochastic settings. Those are subjects which we will be covering today. So what is MACD? As you probably know, or if any one of you is here for the first time with me, let's say that MACD is my favorite indicator. It's been my favorite for a long time, and simply because it attacks momentum and trend perfectly. So MACD is both trend following and momentum indicator. We usually use MACD in a multiple time frame analysis, and I will show you how to do that. MACD will be a standard part of your charts once we finish with our price action training school and we start actually to chart. So before that, know that MACD is and will be a standard tool. MACD is calculated by subtracting 26-day exponential moving average from the 12-day moving average. We usually use EMAs. Momentum, direction, and divergence is also the core part of MACD. MACD is able, because it's a lagging indicator in its core, MACD can define and capture momentum pretty much very easily. It's also notable that MACD is a very good indicator to spot a direction or a trend. And of course, it's great if you want to spot a divergence. Today, we don't use MACD, or it's rarely used MACD, which is found on default MT4 platform. Simply because that MACD has only one line. Today we use real MACD or MACD two-line. As you probably know, I've shared with you my MACD indicator, which is named MACD, and it's used for Camarilla. And MACD simply gives me a great way, it's a great way to detect divergence and to detect an actual retracement. If you are not sure what retracement is, I've already explained in my previous webinars that retracement is just a momentum loss, and it's always a part of the trend. MACD was originally created by Gerard Appel in late 1970s. So at this point, it's enough to say that MACD is used for momentum, direction, and divergence. Divergence will be explained in one of our future webinars. So this is how we detect momentum. Okay, we use always two-line indicator. If you don't have a two-line MACD, just send me an email and I will send it back to you. So up momentum or bullish momentum is when MACD is above 0. Then the short-term average is above the long-term average, and that signals an upward momentum. If green line is above red line and both are above 0 line on MACD, we say that price has buy momentum. Down momentum or bearish momentum is when MACD is below 0 line, the short-term average is below the long-term average, which signals downward momentum. If green line, in this example it's green line, you can of course change the color. If the green line is below red line and below 0 line on MACD, we say that price has sell momentum. So both lines above 0 line, we have both trend and momentum. Okay, remember that. Both trend and momentum. This is buy trend and buy momentum. Short trend and short momentum is when both lines are below 0 line. Now, we can also identify a retracement in uptrend and downtrend. Now, why it's useful to detect a retracement? As you probably know, as I already explained, retracement is needed in order to buy low or sell high. So if you want to buy, you need price to lose its momentum. You don't want to buy when there is an impulse, a momentum, because in that way you're basically chasing the market. You want to jump on a freight train. You don't do that. You wait for the price to settle down, to lose its momentum, and then you buy the dip and sell the rip, or we say sell on rallies. Now, Net is asking, what do green and red lines represent? Both green and red lines represent an actual trend and momentum. This is long-term moving average, this is short-term moving average. When these lines are above 0 line, we have trend and momentum. When fast moving average crosses red moving average, we say that it's still uptrend, but we have a loss of momentum. So in this time, the retracement has started. It's very useful to detect an actual retracement, and I will show you how to do that. So this is retracement in uptrend, and this is retracement in downtrend. Okay, so uptrend retracement is when both lines are above 0 line, but fast term, or in this example green line, moving average crossed red line and it's going downward. So still above 0 line, but pointing downward, crossed. So that means that we have retracement in uptrend. Now this is when we have retracement in downtrend. So both lines are below 0 line, but both lines are crossed. So in this time, we can see that green has crossed red, and both lines are pointing towards 0 line. So the retracement in downtrend has started. This is just an example how multiple time frame MACD looks like. So when you open 4-hour chart, you usually see both trend and momentum. Dropping into 1-hour chart, you can see that it's still trend and momentum, but it's a little bit losing its steam. Now this is M30. I usually use M15, and we can see that, let's say in this example M30, we see that we have basically a retracement. So 4-hour is bullish, 1-hour is bullish, M30 is having a retracement here. So M30 will start to go down, and you can see it's going down. But the trend is still to the upside. Now I will also explain this logic on live chart. But let's say that you can also use MACD to identify a retracement. So it's very easy to identify a retracement just by using MACD. MACD, don't forget, is a lagging indicator. So due to a specific nature of indicators, Traders definitely need to know how to use it. We use it both for MTF, momentum and trend, and we use it in conjunction with lower time frames, both as trend and entry indicator. Now let me open a chart and show it to you. Okay, we will, for example, we will use euro dollar 4-hour time frame. So this is euro dollar 4-hour time frame. Reynolds is asking, can you explain the word lagging? To lag in English means that you go behind something. So that means that the price that the indicator itself is going behind price action. So it's a lagging behind the price. So it's following the price. It's not leading it, Raymond. So we have leading and lagging indicators. I've already explained it. If you're not sure what are leading and lagging indicators, please refer to my webinar. I was also explaining it in price action trading school. So leading is when oscillator is completely following the price in the real time. Now lagging is when price does it, but with a slight lag. It goes behind the price, and it's actually good because if it's leading indicator, it cannot capture the trend correctly because you want to see a trend in the past and in the present, not just in the present. So leading indicators can just tell you a present. They cannot tell you a past. The past can only be told by lagging indicators. And that is why I use MACD. Of course, one of the reasons is to show me higher time frame trend, but also to show a divergence. Now let's use one example, guys. Maybe you are familiar with it, but because this is a class from price action trading school, you need to definitely understand this subject because it will be very important for you in your future price action charting. So let's use this example. Okay, we can use like this indicator. We go to MACD cam, guys, follow me now, because if you don't have this indicator, I can send it to you. Okay, it's here, and we just press here show OSMA. Okay, OSMA we set to true. Okay, and this is how it looks like. Now we are able to detect the price, momentum, trend, and direction. So I will use current example. So let's see. Yeah, okay, this is a good example. So in this example here, we have both trend and momentum. Look at MACD. It's below zero line. For if it's easier for you, I will add zero level. Okay, guys. Okay, my chart is lagging now. It's lagging now. You can see it here. Wait, I definitely need to I need to close my other charts in order to reduce the lag. Definitely, guys, just give me a few seconds and I will do that. Okay, close. Okay, closing it. Okay, closing it. I hope that you don't trade now. Fed is very, very close, so we don't want any risks to take now at this point. Okay, I think that the problem has been solved now. So indicators list, MACD cam, add zero line, black color, you can use other, but it doesn't matter. So this is 0. And don't forget that you definitely need to put MACD cam to OSMA, okay? OSMA. So you need to set it to true, and then it will show you price oscillator as this, okay? Now we are able to spot both trend and momentum there effectively. So we have both trend and momentum. If we zoom into 1 hour chart, we can see that momentum has been lost. So there is likely a retracement on 1 hour chart. What you do now is, guys, is you put Fibonacci retracement tool and wait for retracement to happen. This is a trick which I know from 6-7 years ago, and one of my favorite books which I read about forex trading in general, MACD, was William Blaw's Momentum, Direction and Divergence. And when I first got a MACD two-line indicator, I immediately noticed that by using OSMA setting, it really captures a retracement perfectly. So if you don't know when retracement has started, this is a good trick to show you that retracement has already started. Because a lot of traders in the past and in the present have been asking me, how can we know that retracement has started? My usual answer is, guys, if this is downtrend here, okay, if I see that this price has been rejected, I assume that retracement has already started. But let's say that for some people it can be a little bit hard. So that is when we use MACD. But also don't forget that you will use MACD also in your multiple time frame analysis. This is very important because when you trade with price action, we always need to use multiple time frame approach, because always bigger trend will win over a lower time frame trade. For intraday, 4 hour is simple enough, and even for intra-week swings. Now for midterm trading, you use daily charts. Now, so this is both trend and momentum, so you don't use 4 hour chart to tell you the entry or confluence, you go to 1 hour chart. And here it is. Retracement has been started. Look at this. It was a cross below zero line, but also look at this. MACD histogram start to print above zero line. So this is indeed a retracement. MACD histograms above zero line and cross below zero lines. This is retracement. You put Fibonacci and you wait for retracement. Now that will be a part of the confluence, but let's say in our future lessons, of course I will teach you about the confluence, but until that comes, you have a lot to learn. So this is your first step towards finding retracement points, using MACD in conjunction with multiple time frame approach. Okay, now I'm talking from intraday and intra-week swing perspective. Now let's see, for example, dollar CAD. 4 hour is mixed, but let's say that it shows us that the price has, of course it's bullish, you see it's bullish, but it's lost its momentum on 4 hour time frame, because this was trend and momentum. Now the price has lost its momentum because it's in retracement mode. Now obviously 4 hour time frame is very strong, so when you trade from 4 hour time frame, you don't need to spot a momentum in below time frame. For example, if you saw this, that the price has had both momentum and trend, then you need to switch on to 1 hour time frame. Always, because you always start from 4 hour time frame. But if you see this, that means that the price is losing. The retracement is started here. See, there is retracement. So you need to print and put your Fibonacci retracement here. We will use most obvious swing point. So let's say from intraday perspective, last swing high low is enough. From intraday perspective. I'm not talking from intra-week perspective. You need to use higher swing. But from intraday perspective, last swing high from 4 hour, it's enough. And look at this now. Retracement has started. Now we want MACD to stay above zero line, but we don't want this to print another bullish histogram. We want these two lines to stay above zero line, but stay crossed like this. We don't want another trend and momentum as this one. Now, guys, what I want from you is a confirmation that everything is clear, because I know that 99% of you probably don't know about this concept. So I need a confirmation from you that everything is clear so I can proceed. Okay, just type OK if you are clear with this, what I am explaining. Michael is saying clear, Marco clear, MJ clear. So guys, I guess yes, rock on, all clear. Great. So guys, we can continue. Now, remember our first lesson about candlesticks. And do you remember? Now let me test your knowledge. What did I tell you? What was my favorite candlestick pattern or candlestick bar? Do you know what was my? Yes, Donatas was the fastest one. Ivaldas, Marco, everyone. Yeah, guys, that's good, because from your answers I see that you are following me. Indeed, pin bar is my favorite chart, let's say candlestick pattern. This is a pin bar. Some people call it a shooting star. I don't care if it's a shooting star, pin bar, whatever the name is. What I really care is that I see sellers here. So I see sellers. This pin is indicator selling pressure. MACD is still in, of course, it's uptrend, but we have retracement possible. So this is the time when I will use my Fibonacci tool, and I will place my retracement, and I wait for other chart confluence to show me the exact entry. Okay, now this is just about MACD and finding a retracement. Okay, this is how you do it. Okay, let's see other example. Euro dollar not clear. Dollar Swissy, okay. Dollar Swissy 4-hour time frame, guys, obviously downtrend, because both of these lines are below zero line, but this is retracement in downtrend. Okay, this is retracement in downtrend. Let's use last most obvious swing high low. Okay, so this is it. Okay, I think this could be it, like this. Okay, so this is indeed, guys, a retracement, but because you see it's already rejected from this point here, it's already rejected from 50, but this is how you do it. For example, let's say that you have traded here. Okay, you saw that it's 4-hour, it's below zero line, retracement in downtrend, and look at this. You placed a Fibonacci, and look, 50 has rejected it. Look how good it is. Let me find an example where we actually need to zoom in. Okay, 4-hour, both trend and momentum. So what we do is we zoom in to 1-hour time frame. Why both trend and momentum? Because you see it here, it's above zero line and there is no retracement. This is retracement in uptrend. This is momentum and trend. This is retracement in uptrend. This is momentum and trend now. Zoom into 1-hour. Okay, 1-hour, guys, still the same thing. Both momentum and trend, guys. Look, both trend and momentum on 1-hour. We zoom into 15 minutes, guys. Let's use 15 minutes. I don't pay attention to M30. I go with 4-hour time frame. 4-hour time frame structure. So M15, 1 hour, 4 hour, and M5 if M15 has both trend and momentum. Let's see. M15. No, this is retracement. So Fibonacci is placed here. Okay. So this is how you detect retracement with multiple time frame analysis, guys. It's important for you to know because this is step-by-step school, and eventually when we finish with the school next year, you need to know all of these things. It will be important for you. Okay, so this is clear. This is how we detect both trend and momentum and the actual retracement by using multiple time frame analysis. Okay, so let's move to stochastic now. Stochastic is an oscillator. I personally do not use stochastic to give me and show me a trend. I already explained that we use lagging indicators to show a trend. Leading indicators are used for entries and overbought and oversold conditions. It's good to use MACD with stochastics. Okay, it's good to use it because by using MACD, you're using trend, momentum, multiple time frame concept. Adding stochastic, you're using leading indicator in conjunction with overbought and oversold conditions. That way you can pinpoint entries much better, guys. Okay? You can pinpoint entries much better. 80 and 20 are two main levels. Stochastics can be used on different settings. And definitely signals are taken from overbought and oversold levels. So when you trade with stochastic and MACD, you want everything to be aligned. MACD, multiple time frame concept, and stochastics from overbought, oversold levels. Stochastic consists of two lines formed by K and D. Stochastics attempt to convey price momentum direction changes. It's used in conjunction with other technical tools, and most common settings are 533, 833, 1433, 1455, 855. Everything is subjective, so you cannot say that there is a definite answer which settings are the best. For example, in my previous stochastic practical naked trading, I use 533. With HARP, I use 1433. With price action methods, I need to see, we need to experiment because not all the time stochastic is used with same efficiency. So we need to see how stochastics are used at both higher and lower time frames. My personal favorite so far is 1433. But as I say, there are also other good usage of a stochastic indicator 533, which I think is too fast. So 1433 might be the best way to use stochastic in my opinion. And also a good thing with stochastic is that it can show you divergence. So when we will talk about divergence, I will show you both MACD and stochastic divergence. It's good to know that both trend continuation moves and reversal moves can be used with both MACD and stochastic confluence, divergence confluence. We will cover it in one of our next webinars about divergence. MACD and stochastic divergence confluence. So these are the levels 80 and 20, 80 and 20. So this is overbought level, and this is oversold level. Okay, so it's used usually as entry signal. Okay, let me show you the chart now. You go to insert indicators and you go with oscillators. Stochastic oscillator 1433 MA method simple price fill low high. Go to your levels, press, if it's white background, I love black, and I will go with this. Colors are my favorite: blue, red. Okay, this is stochastic indicator. So stochastic is overbought and oversold. Usually when you want to pinpoint an entry, if you're selling, you want it to be an overbought, in overbought territory. If you're buying, you want to be in oversold territory. So let's say that, for example, we want to go with dollar CAD. So in this example, we have identified that retracement has already started. Now watch this, 43.3 stochastic is here. It would be good that stochastic goes below 20 line. Not necessarily I always look for 20 to be broken. I want to be in oversold territory and that it started to point upwards. So in my preference, it would still be good to go more down while still maintaining the trend and momentum. So momentum needs to be lost, as this one, in uptrend, and stochastic need to go below zero line. So by using this principle, we can pinpoint entries correctly. Now guys, what I'm explaining you, price action training school is actually practical naked trading concept, which I have developed back in 2010. And this practical naked concept is an excellent tool for you to use in your price action charting and trading. So this price action training school is actually practical naked trading course, which I am giving you for free, of course, thanks to Admiral Markets. That is why we have so competitive and exquisite school, which will last for a full year. It's practical naked trading, and every concept from my practical naked trading, even some from Camarilla MACD, are incorporated into price action trading school. So pay attention. Now let's use, for example, euro dollar analysis. Or what did we put? Dollar Swissy, right? 4 hour is having also retracement in downtrend. We put Fibonacci, and look at this, guys. This was a potential signal for you to go short here. This candle here. Now, I'm not saying that this is the system, but this is the concept which we will base our practical trading practical naked trading. So this was a good signal to go short. Now you need to apply multiple time frame concept also when you see that there is a trend and momentum. So let's use it now. Okay, pound dollar, 4 hour, both trend and momentum. Okay, 1 hour, loss of momentum. We need to watch now. Okay, most obvious swing, definitely this one. It happened exactly on 15 December, yesterday. For intraday, you need to use most obvious today or previous day swing high and low. Okay, you cannot go with this swing, it's too low. You need to use higher swing. And now also watch stochastic. So we need a bigger swing. We need stochastic to go also above 80, price to go at least to 38.2 or 50. Of course, this is a concept. We need to use confluence, but just for a concept, we need to see where it will reject. Fibonacci is the first part of your confluence, always. And also, MACD should stay like this. It should not cross above zero line, while 4 hours still needs to show you both trend and momentum. Okay, so it needs to go here, and retracement has started. Euro dollar. Okay, not clear. Dollar yen, not clear. What did we say? Aha, here. Okay, it's not. I want to see trend and okay, yes, this one is good. Trend and momentum on 4 hour time frame, 1 hour time frame, trend and momentum. 15-minute time frame, trend, loss of momentum. We go here. On 15-minute, we put Fibonacci tool because 15-minute time frame is actually our time frame entry time frame. So stochastic needs to go more to the downside, while M15 still needs to be above zero line crossed like this. So somewhere around this region here. Now for this concept, we can also experiment with different stochastic setting. We can experiment with 533, 833 to see the actual efficiency. You see here 533 showed us a confluence with 50% retracement. But if we use a logic, maybe it's not enough that we only see 20 pips of retracement. We want to see a little bit deeper retracement. So then we can experiment with 833 stochastic. See here, it's a little bit better. So this is how we find it. Now, obviously, if the price gets here and this 1433 stochastic is still below 20 and pointing upward, and we see that M15 has stayed within loss of momentum range while still above zero line, it could be a good confluence point for our future reference to actual entry chart. So at this time, you have learned how to use MACD on multiple time frame to spot trend and loss of momentum. You also learn what is your time frame entry. Your time frame entry is always a time frame which has a loss of momentum while still maintaining its original trend. Okay? And you also learn about stochastic indicator, how to use stochastic as a confluence point for entries. Okay? We will delve into this concept, of course, more deeply when we will cover confluence points, entries, but this is how you deal with multiple time frame concept by using practical naked trading or price action. Let's call it price action trading school principle, because this is how you will base your analysis and intraday entries on later when we finish with the school. 4 hour time frame momentum, 1 hour time frame both trend and momentum, both trend and momentum here, so 15 minutes should be retracing. Loss of momentum while still maintaining its original trend. Sushan is saying he will try 1433 4 hour timeline. Yes, you can do it as that. Usually on 4 hour time frame, and not usually, always on 1 hour time frame. In order to use 4 hour time frame, you need to see the loss of momentum, not guys, loss of momentum and trend. So when you see this 4 hour time frame, there is a time when you need to move on 1 hour time frame. See, because both price and MACD are showing trend and momentum. But when you see, let's say a better example, but when you see this means that the price has lost its momentum on 4 hour time frame, and you can put stochastic indicator here. It's uptrend and loss of momentum. like this. Yes, Michael, 1433, I think, in my opinion, is the best setting for stocks, at least for a little bit higher time frame. But also, in order to capture the best setting for stochastic, we need to watch more profoundly how stochastic behaves on 1433, 533, 83, on 1473, different settings, to see where is the confluence with 50, 61, 78.6 retracement, and how where it is showing us. What is it what stochastic is actually showing us? For example, here, if we put it to 533 settings, you will see that 533 actually is still above 20. So for 4-hour time frame, we could also maybe use 533. It's still subjective. We need to test it. 1433 has been so far best stochastic, but I use it with range bars, not with Camarilla MACD. In practical naked trading, I experimented with 1433 and 533. Now, because some things have changed, price is more volatile than it was like 5 years ago. We need to find optimal settings for stochastics. But it's at this present time, it's 1433 at present time. Okay, because you can also test it like this. Okay, assume that this was the price and that the price has started to fall from this point. Okay, you see MACD has crossed here. It's still above zero line, crossed above zero line, but MACD has crossed down. So we go with Fibonacci retracement here from this part, or we can use last swing here. And you see here, perfect rejection from 20 and 61.8. So yes, 1433 still is good with its own means, but as I say, we can experiment with it. Good thing about this price action charting and trading is that you can always experiment and watch for different settings to optimize your strategy. So guys, this is everything for today's webinar. Of course, this webinar will be uploaded, and you definitely need to watch it again if you're not sure what we have been talking about. But a good thing is that all of these concepts you will use in your future trading classes. You need to understand all of this perfectly, okay? All of this perfectly. Also, another and next webinar about price action training school will be on December 30, RSI and CCI in depth, because RSI and CCI are also great indicators to use, so we will watch these two next time. Ron van Hammersveld is saying, thank you, it's my first lesson but learned so much. Ron, do not skip other lessons. This is Admiral Market channel. It has its price action trading school has its own channel within the Admiral Market channel. So please watch all of these previous webinars, because it's very important for you, very important for you. Last question, how do I color MACD histograms? Indicator list, MACD here, colors, green, green, red, red. Go with blue, blue, let's say, and blue and red, like this. This is how we color it. And once more, don't forget, to get this indicator, just email me, and you need to put it on OSMA setting. Show OSMA true. You need to switch to true, not false. False is by default. You need to switch it to true in order to get MACD as I have it. Thank you, guys. Thank you for listening. Thank you for comments. And let's see what will happen with today's historical Fed's meeting. As I always say, guys, cheers and trade safe.